Today's number is 39 because what tends to happen here has dramatic implications for us as traders and investors into the end of the year. And with us fast approaching one of the most important trend lines of 2025, we need to talk about it ahead of Jerome Powell and the Federal Reserve's expected rate cut. On top of that, what happens when silver has a bust this big? Could it be that this big sell-off actually is a blessing in disguise for some of our favorite metals, including gold? And what's happening with Bitcoin? It came back to the level that we discussed, but was unable to break through it. Now it's got two massive rejections. Could things be about to get worse before they get better? And do we remain bullish into the end of this year? Guys, there's a lot to discuss. It's great to be back. Let's talk stocks, commodities, and cryptos right now together. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be looking at everything that you need to know right now together, including the macro, the data, and the key levels that you need to be watching. Yes, there have been a couple of big options moves over the last couple of sessions, so we'll be talking about that and why Wall Street may not want you to see them. And more importantly, what is going on right now with semiconductors? Yes, we thought NVIDIA would do well, and boy, oh boy, was that a great session for it, with deals being done across the board. It seems like that is the market of 2025. Everyone's doing a deal, and it seems like a circular kind of Ponzi in some ways. But anyway, we'll see how that ends up working. Guys, if you haven't already, make sure to sign up to our weekly newsletter. Remember, it's back, and of course, it has an exclusive chart in it each and every week. It's totally free. Links in the pinned comment and description down below. And we've got a new one coming for this earnings season later on this week. So make sure to sign up for it, and I don't think you'll be disappointed. There's some great stuff there. Now, let's kick off with some data. Then we'll go through, of course, some of the thoughts here into the end of the year, that 39 and 1 statistic, which is pretty phenomenal. And of course, then the options flow and the charts. And we'll start off here with gold. What a epic crash that was with gold. Of course, we saw markets across gold and silver fall as much as 16% on one of the metals. And of course, these are big moves. Now, when you move this much down, you might think, well, it's all over. Actually, it is maybe not so bad when it sells off this way. And in fact, Subu Trade has gone through and found out that when gold falls more than 10% in 6 days, it's generally very bullish 2 months later. And it could also be that we're kind of getting to that low level. We've talked a little bit about the daily 50 moving average, which we'll bring up later on. Actually, silver hit that level. And this does tend to be a very important level, particularly for silver. So let's talk silver for a second, because it actually fell about 16% from top to bottom, and it fell 12% over the last 6 days. And again, you might think, oh, that's the end of the world. Well, actually, again, very strong data here for the next 1 month and 2 months. So what comes down, especially when it's been in a rally like that, often does go back up, because remember, strength often does bring back the bulls. The question will be, are we more in a 2020 style market, or are we more in some kind of big bull run like the 2000s, mid 2000s particularly? Now, we've also been talking a lot about 2006 having similarities, which you'll see why when we look at the stock market later on. But we do remain bullish on silver and gold. It's just that we, of course, were temporarily weak on it, just due to the fact that people were lining up in the streets trying to get gold and silver, selling the candelabras, guys, and doing everything else they possibly could to get their hands on bars. Remember, if someone's paying 15% above spot, they're mad. And at the same time, they're also feeling some extreme FOMO because they ain't getting their money back for a while. Have they even thought of what happens when they want to sell out? Pretty sure they're not getting 15% above spot. I'm pretty sure they're getting a below spot. So your buy and sell on gold bullion, yeah, that is not a good buy. And I hope those people are not you guys out there in the community. Let's talk a little bit more about gold down. So gold's down 3 days in a row. Of course, it took a new low, which we suspected it would, and it's come down to a pretty interesting level. Now, why is this important? Well, when it tends to come down here, you can see Blue Curtic's gone through and found all of the data stats around it, and it's all visualizations here. There's no real absolute low point, but what you can see sometimes is it marks a temporary low, sometimes with a rally off it. So the kind of odds definitely favor, I guess, the brave at these points. And I think more importantly, if we are in that kind of 2000s run, remember the overlay that we've had so far with gold is similar to these types of pullbacks that we're expecting. Sharp pullbacks followed by hopefully rallies. Now, I'm kind of suspecting it's more like a 2006 version, so it may sit around for a little while. But again, those 2-month stats were very, very good when we looked at the Subu trade data. So I still like gold. I still like silver. It's for all the main reasons. Central banks are purchasing it. We've got all sorts of weird, phenomenal, kind of strange things going on in the world that make us want to maybe get away from fiat currency. And least of not which is that we're pretty much getting cuts across the board. In fact, the number of global rate cuts in the past 24 months is at post-global financial crisis highs. So the central banks have been doing everything they can to keep these markets alive and bullish. And of course, we do not expect the Fed with its single mandate anymore to not want to do cuts. Yes, inflation's coming back. In fact, we saw it in Australia, which is where I'm from. It's starting to creep a little bit higher, guys. It seems to be kind of sitting and lurking in the US as well, just behind everybody's smoke and mirrors. And I think all of us on the ground level are kind of seeing this. So there are concerns, but again, the bull market will continue as long as the Federal Reserve, the government, and of course the liquidity supports it. And that's one of the big things here. The liquidity is still there, although it's starting to dry up, even though we may actually find out soon that maybe a QE form is coming back. You'd be surprised. Actually, liquidity's been in the markets for years, even though they've been telling us it's not. Remember, they've got many different tools and they've been using quite a lot of them. Now, onto the bear side scenarios. We always look at both ends here. What are the bear sides? Well, obviously, heavy truck index here, i3 Invest, showing that it is in a little bit of a free fall at the moment. And this can show, I guess, concerns in the back end of the macro side for the economy. We've obviously seen recently a whole bunch of delinquencies in different areas. We've seen, of course, concerns over commercial buildings and all sorts of things for years. Now, it's important to know these things, but not necessarily act on them as just once-offs. You have to build a stack of evidence. And remember, if the bonds market is not freaking out, why should you? And it's a very important one. They have more information than we do. What we do is we pull the pieces of the puzzle together to hopefully build a broad base. But sometimes they've got a lot, especially when it comes to the debt in markets. So the question then becomes is, have we just hit another temporary high? Yes, just a few days ago, we were talking about how bullish it is, and then it moved up 2 sessions, and bam, bam, we're all the way back at what has probably been the most well-known kind of ascending channel here on the S&P. And you can see that it's also done a little doji on the main market, which often does show, as you guys know, equilibrium or fair value. And sometimes that has been considered the highs. You can see here, Reformed Trader making this chart. That's pretty cool. And of course, it shows the top. We've got more on that coming up later in today's show. What about put call ratios? Now, this one's a little bit questionable. I've been looking at put calls and I can't exactly see a similar read. But anyway, bar chart here has total put call ratio is falling to its lowest level since 2020. Bulls are going for it. Now, of course, this is important to note because the last time we saw this was over here. And this was like January of 2021. Obviously, at around that point, what happened? We saw a fall soon after in the markets where it got a little bit volatile. But this is, a very interesting point because basically what's showing is that calls are everywhere and puts have disappeared. So that means no one's hedging again, which is a good sign, again, if you're actually being bearish, because when no one's doing it, you want to potentially be thinking about it. When everyone's doing it, that's probably not a great idea. So what we do know is that it's been positive gamma and calls have been pushing higher. Now, there are a couple of other charts going around. This one here from Zero Hedge, which basically just shows, guys, the breadth is weakening when it comes to certain areas of the market. Now, I would say that breadth is one thing, but Walter Diemer always looks for internals and, of course, looks for advanced declines. As we hit today's session, we actually saw only 1,053 advancing, and declining was 1,717. So it was actually a declining day. Now, by itself, of course, that's not enough to short off, but it's interesting it's happening at the trend line. The question then will be, even if we do get, let's say a 1 or 2% or even down to the bottom of the ascending channel pullback, will that actually be terrifying? Well, let's have a look here at the stats. And again, the stats do not look bad. We had markets jumping above their Bollingers. So you can see here again from Subu Trade, the market has gone ballistic. It's gone above its Bollinger. Does that tend to bring it back down into line? Well, the answer is yes, it often does do that. You can see here 2 weeks later, 1 month later. But have a look at the stats 2 months later. Have a look at the stats 9 months later and 1 year later. Yeah, it's never been a negative signal. So again, if you're getting negative signals off Bollinger readings at the moment, whereas they're jumping higher in the Nasdaq and S&P, it usually hasn't been that bearish. Another thing is that high beta versus low volatility. You can see here JC Peretz, courtesy of Trend Labs, have been going through this one. You can see that high beta has, of course, been going up. And yeah, this is the type of thing that you look at in markets. Generally speaking, when we get this, it's pretty normal and it is a good sign. So again, it shows us that this market is, at this stage anyway, liking it. And this is more of what we kind of have seen, even with those VIX spikes the other day caused by the tariff information and some other things. We knew that most likely this market would push higher because, of course, you can see here from Duality Research, VIX crushes the way it's happened generally do bring the bulls. So let's take a look at some more stats for the rest of the year. Do we need to be concerned about the current market as it sits? Are we in a bubble even? Are we in, of course, some type of market that's going to go absolutely ballistic and then end terribly? Well, we've already talked about the bubble several times here on the channel. And of course, I think we saw peak bubble searches in August of this year. And remember, it's not when everyone calls it a bubble, it's when they say this is the new norm. Okay, so it's the new norm that you want to be terrified of, not the bubble. Bubble means, oh, I want to buy. I've said that for a long time. When the bubble words are happening, I love the market. We want to be in the market generally because bubble equals no crash. When the new norm comes in, look at this fantastic technology. And I kind of feel like that's going to happen in 2026 with a bunch of flying robots jumping, doing jujitsu robots. Have you seen the videos? We're doing some dance routines. I'm waiting for the new music clip where it's just like some star out the front and a bunch of robots dancing in the background. When all that type of stuff happens, then we can be concerned. But for now, up over 15% year to date, end of October, you guys can see we have got usually more to go with all of these little red lines. There's generally more action to go. So again, if we do see a blip on the horizon, such as this type of thing over here, and this data goes back for a long time, then usually we get more. So we usually have a higher high to be made at least over the next weeks into months. Let's have a look at the sectors that have been defining this last month. And yes, it's being led by semiconductors. Well, actually led by clean energy, but led by semiconductors as well. Is that a bull market? In our opinion, it is, because of course, if semiconductors are leading, we know that's the backbone of this AI kind of bubble that turns into the new norm. So therefore, it is very, very good when semiconductors are leading. We've also had some new sectors. So IBB Biotech, which is benefiting specifically from AI, it actually will benefit, plus the rate cuts that are expected from the Fed. That's been a bit of a dark horse. And even one that we've focused here on the channel for the last couple of weeks. Guess where it came from? Old oil services out of nowhere. We've also had some defensives, healthcare coming out of nowhere. That's something we've been talking about in our private community. Links in the description down below. So remember, there are plenty of different opportunities and sectors to be in. And I think the thing here is it is a stock pickers market. Clearly, people are waking up to that. Yes, the index is one thing, but if you want to beat the index, obviously you have to find the right sectors. And it has really been a stock pickers market since Liberation Day. The best kind of gains have happened from picking single stocks and particularly the right areas to be in. So you should be always thinking about that and thinking outside this box. Now, Wayne's done a great study. It's one of my favorite ones of his during the year, which is obviously the year-on-year roll from October 27th all the way to the January period. And what he found was, in this case, when he went back and looked at last year from October 27th to 27th, we made 16.93%. And when it's greater than 10, yeah, it brings out the bulls. 39 positive to 1 negative into January. And that is a very strong bullish statistic indeed. That is a huge bullish statistic. Not just like one read, that is consistent for a very long time. And it actually makes us wonder whether we're even more on this 1998 kind of historical comparison here with the markets. Because you can see what's happening at the moment is the markets have rallied since, of course, April. Then we get here to April of 1999. So we actually have a pretty consistent bull run, which starts to slow at about this period. So the index gets a bit more boring, but maybe single stocks get better. And then, of course, we top out effectively somewhere around 2027. Now, you can see this one here is from Optima and Seth Golden. And you can see that, again, it's along the same lines we've always been talking about. Are we following a dot-com bubble? To me, it does seem very similar. And to me, it also kind of goes back to that stat, which is, of course, MIT finding that only 5% of AI projects were actually going to have any real effect in terms of productivity and stuff. And I think this is important. We know AI is the future of investing. We know innovation is the best to get into. But at the same time, with any new tech, it takes time. So let's now talk about whether the market's getting ahead of itself into what has been a very, very bullish market into earnings per shares. And of course, what we've been seeing here when it comes to forward forecasting. You can see the market's pretty far away from its overall forecast. So that means it's pricing in perfection. I will not mispronounce this person's name, so you can check out this data here if you'd like to. But you can see that this earnings season, we have been living up to expectations. This is pretty good, an 87% beat. And even the latest data, because this is the one we shared on the weekend, that's showing, where have we got it here, duality here, that's showing us an 86% beat. So you can see here with current growth pace, we're on track to really see this market actually go back up to levels that may sustain a little bit more. But still, the differential from where the market's got to and where the current earnings are means that we are going to be priced to perfection all the way into 2026. So that means that markets will have to see this forward growth. And I expect sometime in 2026, we'll get some kind of concern of growth. And when that happens, then you'll really see big issues in the markets. But for now, everything seems to be very rosy, and this earnings season seems to be pushing through. Russell 2000 small caps, you can see here the Russell 2K broke to an all-time high recently. We've talked about how we think the Russell 2K may have the legs in it, just mostly not through the regional banks, so you kind of need to get them out of it because you don't want the banks. They're scary at the moment. There's certainly some problems there with those CLOs we'll talk more about in the future. And it sounds like 2006 to me. And basically, we also have, of course, the IBB, the biotechs really pushing it along. They're the two main sectors, but do remember that, like, what is it, 35 to 40% or maybe even higher of the Russell don't make any money. So, of course, interest rate cuts do benefit the Russell a little bit more. And if the Russell does better than large caps, especially over the next 3 to 6 months, that is a huge warning sign to us. So we will be watching that very closely. But for now, of course, everything seems okay. Let's now take a look here at CPI expectations. It looks like CPI will drop into the end of the year if it follows normal path. So again, if it doesn't, that's actually more of a concern. And then the question happens more next year. So that's when we will see whether we actually do have a reinflation problem. I suspect we do, but at the same time, the market is not worrying about it, so we don't need to either. What about margin debt? Yeah, it's accelerating, guys, and that is a concern. But again, it could be similar to what we've seen over here, where margin gets absolutely out of control. And I would suggest that it probably will get out of control before markets go bad. I'm looking for the Texas Stock Exchange later on this year. I'm looking for tokenization of everything. I'm looking for all sorts of stuff to really show us that we've got this leverage going through. And remember, JP Morgan just approved any kind of, I think it was like Bitcoin or Ethereum holdings to potentially be borrowed against for housing. So that's going to be an interesting one. After the close today, big one, earnings. Meta, Microsoft, Google. We like Google, so hopefully it can maintain its glory. And Amazon and Apple doing very, very nicely as well recently. And you can see here specifically the expected move. Starbucks is out in front. The options vol has this moving plus minus 9. Meta's going to be moving maybe 100 billion on the day. It's just amazing how much these are moving in terms of cap size now. That's plus minus 7 to 8%. That's going to be wild. Google's going to be a big one, plus minus 6.5%. Wow. This is going to be huge earnings, guys. So make sure to stay tuned here to the channel. We'll have a full synopsis of these three after hours tomorrow, so we can go through what happened on the earnings calls, what exactly is going through. Let's now take a look here at the S&P, and you guys can see it is pretty clearly in an upward kind of channel here. It's been doing very nicely. It's been 2 steps up, 1 step down. It just recently hit the bottom of this. So the question then is this a little bit of a top for now? Remember, what do we have? We've got usually positive gamma levels. So if we go through 6,900, where's the next stop? 7K. And we've kind of argued that this is probably on its line to go towards 7K at this point. And I cannot believe this, but last year I said that the market would hit 68.50 by the end of October. And this was in September during one of my chats that I do here in Australia, and I'd love to come do them again in the world. So stay tuned for that. And I just cannot believe it actually happened with the 10% cool down that actually went 20. So if you'd said to me, oh yeah, the 10 will actually be a 20. Remember, we expected a 10% pullback this year, not a 20. And then we'll be back at 68.50. I'd say, well, that does seem like my line, but maybe not 20% pullback and then get there. So it just shows you how miraculous this recovery really has been. And it's pretty spectacular. So I'll be looking at my next 12-month forecast soon. And of course, I'm doing the works of that at the moment. But things are kind of lining up with us being in the new norm. So that means that people are just going to ignore risk, I think, over the next 6 to 12 months, more so than ever before. And that can create some pretty exacerbated gains and losses. US 500, we are, of course, spiking still. We're moving higher. Here are the highs and the lows. Not much to really note here on the US 500, other than the weekly 20 still hasn't been touched. There it is. It's so far away from current price. And it can get further, but certainly it is quite far away. Let's now have a look here at the options, which is probably where the interest comes in at the moment. So we've got 6,900. Close above that, we have to think 7K is the next level. We don't really have clear put lines anymore, so clearly the market has moved more into the positive gamma call levels, but it'll feed upon itself above 69 to 7K, you would think. And NVIDIA is obviously just phenomenal. Look at that thing, 200 plus. It could be going to 245. Could it get there? Obviously above 200, 205, you're in massive positive gamma. I'd say congratulations to anyone that's been on that one, because as you guys know, we only saw positive action in the price action, and it didn't really matter what anyone's opinion was. The main thing was that the action was positive and we hit that first target. And obviously 245 is a possibility if you're looking at a multiple ratio. Tesla 450 plus, that equals usually a positive gamma event. And it's been pushing. So where does it usually go to? Well, round numbers are Tesla's favorite. So probably just below 500 is kind of the aim there for the stock. Again, practice risk management, guys. Make your own decisions. It's not a solicitation to buy anything. And iBit, you can see here we have the old crypto Bitcoin kind of major. And there's no real puts other than 60. So it still seems to be kind of stuck within a zone. So again, if we get through 116.5, I think that's a big deal. We'll look at that later on, but that's one big point. Now, on to gold. I said there was a massive put level that was interesting. Well, gold's it. 360, guys. Look at this 360 GLD. Now, that just so happens to line up very well with that daily 50. And that's really cool, because what that's telling us is that we've probably hit a good put wall. And that makes sense to Subu Trade, Blue Curtix, and other people's data as well, which I really like. So again, when you marry up the options with the data, it's a beautiful thing. And we teach that, of course, in our courses. Links in the description if you're interested, especially the advanced course and the day trading masterclass. You'd be doing all right, I think, off those recently. Let's have a look at the VVIX. Let's go into the charts. What do we got going on? Volatility markets are spiking a little bit in terms of the behind VIX, and the one that you don't usually look at. And you can see here, normal VIX has just been crushed all the way back down to the lows. But that doesn't matter if the bonds market doesn't care. And guess what, guys? Bond spreads do not care, okay? So they do not care, and the bonds market is not freaking out, so we can't. And PCC, the normal way we look at it, yes, it's starting to get down there in terms of there are not many kind of puts in the system anymore, but I wouldn't say it's like diabolical levels yet. So again, it's unlike the warning we gave a little while ago where we got that kind of flash sell. I think at the moment, it's not looking too bad. Dollar index, really still key levels, 99 plus break high, dollar more bullish. And of course, that's going against the press. We've been sideways to bullish on dollar since over here. When was that? July. And that's exactly what it's been doing. Because again, when everyone becomes too overcrowded in the trade, you generally want to look at the technicals. And if the technicals and the levels and everything marry up, then you probably want to be doing the opposite thing. Gold almost hit that daily 50. I wouldn't mind it to do this. In fact, my favorite thing for it to do would actually be here, consolidate, dump, rally. And if it did that, fantastic. For now, though, it is pretty much around those levels that most people are going to like. And silver actually hit 46 and under for the ounce, which is pretty cool. It's got a bullish hammer. Again, people will be looking at 49.50. I think this is a good first sign for silver. And you've got to remember, silver has dropped more than gold, but that's normal, 16.2%. So pretty big sell-offs. And you might say, well, why am I liking this daily 50? Daily 50, daily 50, daily 50, very consistent in this bull run. So of course there's going to be a bidder there, and we mentioned that in our weekend video. Now, speaking of which, what about oil? Well, oil hit supply. It's actually had a really good day trade on it short. And I think day traders short will be either taking a little bit of profit here and then break evening their positions, because most people probably be somewhere in here if you know how to replicate that trade. Now, if it breaks past 63, is that good? I think that's really good for oil services. I think that's really good for oil. I think that's really strong for energy. At this stage, though, remember the trend has been consistently down, so only very small time frame trends have changed up. Early days, current trend is down when it comes to really small time frames as well. Then on Tesla, you can see here 460. That is now the highest close. Highest close? No, there's one close over here, 480. But highest close recently, I think, just above this point, which again is strong. And we knew that past 450, that's going to be pretty strong for Tesla, which it continues to be. Chinese markets continue to push higher. No surprises there, guys. Obviously, that's what we expect it to do. And NVIDIA does a big push, 5% up in a session. Congratulations if you're on that. Well done, guys. Beautiful little double bottom in here as well. Great Friday trade in 2 days. I mean, how much is this up? Phenomenal money. 8.9% on the biggest stock, best stock in the world. That is just some nuts stuff. And actually, although I wasn't loving it as much anymore, the old PayPal did okay as well. There's been actually quite a lot of different trades recently that have been pushing, and in our community watch list, we've found all sorts of different positions. So I guess like what I always say is when you're looking for opportunities, just remember there are so many different ops. Now, this is what PayPal did, and it's typical of it. It announces a deal, has its earnings, cracks a 78, and then gets dumped down. This is typical of this particular stock, but it just shows you this type of nature of 2025. It's just about announcing collabs and partnerships with other stocks and areas, and it seems like things will be going pretty good. Now, a few of you mentioned I have to talk the Dow. It's been a while since I talked the Dow. The Dow has been actually pretty good recently. So again, it's been bullish. You can't say that's a bearish looking market. And the US 2K has just been kind of plodding along as well. So with that, we're obviously looking at IWM versus SPY. And at the moment, you can see here the Russell's been declining. Now, I will pull out the banks because the problem here is these guys, these regional banks. There's something bad there, okay? We don't like what's in regional banks, but that is part of the Russell, so that's why it's been declining a little. And you can see here the NASDAQ, while it's overbought again, massive gain, it is pushing higher, and it can keep going for a little while. Now, let's just quickly talk Bitcoin here for a second. So this is actually a very interesting candle formation. We've got a rejection off 116.5. We may have said that, didn't we, guys? And then, of course, we've got another rejection. That's actually quite a bearish setup. So this is actually quite bearish looking. Now, personally, I wouldn't short this because I don't want to short Bitcoin. I'm a little biased towards the upside for a couple of reasons. But the market may go down. And if it clears 98 off this and then bulls, man, I'll be feeling good about it. But another thing is, what if it clears 116.5 now? That will actually be very bullish. There's going to be a lot of people selling here, and a lot of negative people on the crypto markets. So I think that's going to be a really interesting one to look at, and we'll certainly be focused here. But that looks kind of negative on the daily. And again, on the things like the 4 hour and stuff, it's hard to really discern. It's not quite on like a 111, which would be more like where the support is. But this rejection here does show there's some volume here at 116 trying to stop the market. So again, if you rally above that, then you're probably pushing higher and squeezing those shorts. But for now, you can see small time frames. Clearly, these sellers are pressing this. Now, guys, there is news. And of course, we always know that the old Fed can get things done. It's expected we're going to get a 25 basis point cut. Probably more interestingly than that is probably the press conference afterwards, where people will be looking for all sorts of policy. You've also got Bank of Japan monetary policy. There's a lot of central bank action over the next 24 hours, along with earnings. It's a blockbuster day. It's a big one. We'll be bringing a special after that day to have a look at what's actually occurring. But for now, you can kind of see, yes, the S&P's kind of hit the top-ish, of a random trend line. Yes, the put call ratio in some aspects is getting a little bit dangerous again in just a few sessions. We go through 69, you have to think 7K is coming. And obviously, the main thing here, it all has to do with, what time frame are you looking at? Are you looking for just a few days or a few months? Because that Wayne study is in compelling stuff. And you've got to be looking at that and saying, well, wait a second, are semiconductors weakening? The answer is quite simply no. And if they're not weakening, and that's the best backbone in the markets, then you've got to think at the moment it is climbing the wall of worry. So temporary sells, like we've been talking about for a while, will likely be bought by the street and by everybody else. Guys, if you haven't already, sign up to the weekly newsletter. Check us out next. Follow me on LinkedIn as well. I post there fairly regularly. And I look to do more soon in the future. And of course, if you want to find out more about replication, how you could have even gone to that little oil short and made a decent ratio already, 2-to-1 style ratio, check out the day trading masterclass. It's actually more of a positioning class. So it's not really just day trades, it's days into weeks even. And of course, the advanced class will teach you about all this cycle stuff. Guys, fantastic. Thank you so much for supporting the channel. We appreciate each and every one of you. I will see you in the next one. You have a fantastic day. And boy, oh boy, these markets are exciting. And I cannot wait to see what happens over the next 2 sessions. This is huge earnings. It doesn't get bigger than this. This is a Super Bowl of earnings, guys. We're in the Super Bowl. Or is it at the moment, what is it? I think it's baseball's being played. We're in the World Series, guys. World Series of earnings. All right. Catch you for now. Bye-bye.